Hello, and thanks for joining us for the latest Markets at a Glance update. My name is Piotr Chwala, and I am Manager of Private Markets at Westpac. The U.S. Federal Reserve raised its overnight interest rate another 0.75% in September. The ongoing rate hikes seek to temper persistently high inflation. The Fed's preferred measure in inflation, the Personal Consumption Expenditures Price Index, rose 0.3% in August. It was up 6.2% year over year. Many global central banks followed suit by also raising rates. This effort was not only to temper inflation, but to maintain their currency strength relative to the US dollar. I'll speak to this in more depth shortly. The newly elected UK government, led by Prime Minister Liz Truss, found itself in hot water. The day following a central bank rate increase of 0.5%, the government announced substantial tax cuts and energy subsidies. Bond prices spiked, the British pound hit record lows, and market volatility ensued, causing distress among a wide swath of British pension funds. This forced the government to quickly buy back bonds and revoke the tax cut. Let's take a closer look at the appreciation of the US dollar in our chart of the month. The US dollar has seen record gains against international currencies in 2022. A strong US dollar can help reduce US inflation by reducing the price of imported goods and services. It can also hurt US exports and reduce the value of US investors' overseas investments. Equity markets also suffered losses as fears of a recession grew. During September, the S&P 500 index of U.S. stocks declined 9.2%, while non-U.S. stocks, represented by the MSCI ACWI ex-U.S. IMI index, declined 10.1%. Corporate analysts reduced third-quarter earnings estimates for companies in the S&P 500 to 3.2% year over year. This is down from 9.8% at the start of the quarter. Finally, Hurricane Ian made landfall in the southwest coast of Florida as a Category 4 storm before crossing over the Atlantic and making a second landfall in South Carolina. The deadly storm brought catastrophic flooding and winds. Estimates of the economic damage are over $100 billion. We hope that those of you in the affected areas were spared the worst of the storm. Our thoughts and prayers are with you and your communities. To read more about this news and to see how it affected our fund performance for September, please check out our latest monthly investment report.